Hey, what's up, guys? How you all doing? So today I'm going to try to answer a question which most new investors have. Which is the better investment type? Real estate or the stock market? Now, for some of you guys who've been following my channel for a while, you kind of already know which one I like better. But today I'm going to make an unbiased comparison between both investment types so that you have all the information needed to make the best decision for yourself. But before we get into it, I need you guys to do me a huge favor by hitting the like button and also subscribing to my channel. It will really mean a lot to me if you do that. See, my aim in this channel is to help people get ahead financially and make wise decisions with their money. And the way the YouTube algorithm works is that it pushes videos with more likes to people out there who are looking for financial tips to get ahead. So I really do appreciate it. Thank you very much for doing that, and let's get into it. Determining the right investment vehicle is really based on your own personal preference. In today's video, I'm going to provide 7 factors that will help you decide if real estate or stock market investing is better for you. The first factor we're going to talk about is convenience. This is one where the stock market wins. See, investing in the stock market is as easy as ABC. All you need to do is open up a brokerage account, deposit money into that brokerage account, and then you can purchase whatever stock you're interested in. It's that simple. Real estate investing, on the other hand, is not that simple. It requires thorough knowledge of the fundamentals of real estate investing in order to be successful. You have to first of all determine which location you want to buy into, and then you have to analyze and run numbers on several properties to determine which one of them would give you profit and not loss. And then you have to conduct walkthroughs on several properties to make sure that the properties don't have issues, or have an idea of what you're going to be dealing with when you purchase it. And then you have to find a lender, an attorney, an appraiser, an inspector, and also submit tons of documents before you purchase your first rental property. And then finally, you have to figure out how you're going to get the right tenants, do a detailed background check to make sure that the person you're putting into your rental property wouldn't provide any trouble and would always pay rent when due. Now, there are ways you can reduce the amount of work on your side by getting a property manager to handle some of the details I mentioned. But the bottom line is this: that you're still going to have to be worried. You're still going to be worried about certain things, such as the risk of the tenant not paying rent or having huge repair bills, things like that. Now, there are ways you can prevent or cater for such problems, but we're not going to get into it. The bottom line is this: that real estate investing is not as convenient and stress-free as stock investing. The second factor we're going to talk about is barrier to entry. More specifically, we're going to focus on the amount of capital required to get started. And this is one area where stock investing wins. See, nowadays you don't need a whole lot of money to get started in stock investing. Most brokerage accounts will allow you to purchase fractional shares of large companies for as little as $1. So you can purchase shares of Apple, Facebook, Google, Netflix, and so on for as little as $1. Real estate, on the other hand, doesn't provide such advantages. So most lenders will require you to put down a minimum of 20 to 25% down payment on the purchase price of a rental property. Now, you can get away with putting down as little as 3.5% if you're going to live in the property and later on convert it to a rental property. But even 3.5% is still a whole lot, especially when you consider the average cost of homes in America right now, which is about $300,000. 3.5% of $300,000 is $10,500, and that doesn't even include closing costs. Now, there are creative ways you can purchase properties with no money down. I'm not going to talk about that in this video, and I also would not strongly recommend that approach for anyone who has no experience and who's just trying to get started in real estate investing. So the bottom line is this: okay, with stock investing, you can put down a very little amount of money to get started and get that experience in investing. But with real estate, you're going to have to come up with more money down. So stock investing wins in that aspect. The third factor to consider when making an investment choice is liquidity. This is another area where stock investing wins. See, stocks are very liquid. What that means is that if you need access to all of your money today, you can easily sell all your stocks and within 24 hours have access to the entire cash. Real estate, on the other hand, is not so liquid. If you need all your money back, you either have to sell the property or refinance the property. Selling the property could take weeks, if not months, to find a potential buyer. Refinancing the property could take anywhere from 30 to 45 days, but you still would not get all your money back because the lender or the bank would want to hold on to a portion of the equity, which could be anywhere from 20 to 30%, depending on the lender you work with. So you're only going to have access to 70% of your capital invested in the property. The fourth factor to consider when making an investment choice is control. And in my opinion, I think this is one area where real estate investing wins. You see, when you purchase a stock, you have very limited control of what happens to your money. Most people purchase stocks based on past performances or where they think the company or the stock will go to in the future. Unless you actually work in the company and have direct control and knowledge of the finances, you really have very limited knowledge of on how the company will perform the next 1, 2, or 5 years. The stock market also is very volatile, which means that a lot could change within a very short period of time. So you could purchase a stock today, and in about 24 to 48 hours, your portfolio could be down 30 to 50%. And if you're the kind of person who's not really patient and who can't really withstand the highs and lows of the stock market, you might be forced to sell and make a loss. There's even less control if you have a retirement account such as a 401k or a Roth, because those retirement accounts typically won't allow you to withdraw your money before the age of 59 and a half without charging you a penalty. So there are lots of limitations when it comes to investing in the stock market. Real estate, on the other hand, provides a higher degree of control, which means that you can more readily predict the returns on your investment even before making such investment. Okay, you can also mitigate risk by ensuring that you purchase the investment property properly. Okay, you can do this by purchasing a property in the right location and running the numbers to analyze what the rents would be, your gross income would be, and also the expenses. The fifth factor to consider when making an investment choice is income. And this is one area where real estate investing wins. Okay, see, when you invest your money in the stock market, the only way to make income, passive income from that investment, is what we call dividend payout. Okay, and there are two problems with this. Okay. The first problem is that stocks that pay dividends, not all stocks pay dividends, okay? And the stocks that pay dividends typically don't appreciate well. And the reason for this is that, when companies make profit, okay, there are three things they can do with that profit. They can either use that money to pay down debt, they can use that money to distribute dividends to their shareholders, or they can use that money to invest in other opportunities that would make them grow. Typically, companies that invest all of the profits into new opportunities that make them grow are companies who see the highest increase in their stock values. Companies that use the money to pay down debt and pay dividends don't see increase in their stock values because there is a lesser propensity for growth. Okay, because they're not exploring new opportunities. The second problem is that even companies that offer dividends don't offer high enough dividends. Okay, the average dividend you would find right now in any good company is about 2 to 3%. And what that means is that if your aim is to one day maybe leave off the passive income generated by your investment, 2 to 3% is simply not enough. Okay, you're going to need a massive portfolio in order to retire comfortably and leave off that 2 to 3% dividend. Okay, so if you have a portfolio of $100,000, 2 to 3% is about $2,000 to $3,000, which is not per year, which is not enough to leave off on. Okay, so you need to have maybe like $1 million or $2 million in order to be able to leave off the dividend. Because one thing you don't want is to start chopping into your portfolio and withdrawing your capital. You never want to kill the goose. Okay, you always want to eat the eggs so that the goose can keep getting bigger and bigger and producing more and more eggs. Okay, and that is where real estate comes into play. That's the advantage that real estate provides. See, with real estate investing, you can get income. Okay, and income in real estate investing is what we call cash flow. Okay, and how that works is that you have a property. You have gross income coming in from the rent, and then you pay out all the expenses that are needed, and the left or the remaining amount is what we call cash flow, which you receive every month. Okay, with real estate, there's a higher possibility of getting a higher cash flow return while also seeing the initial investment, okay, your capital, appreciates massively year over year. Okay, now in the link down below, I've provided an Excel sheet where I provided a detailed analysis of a property, so you can see how easy it is to get massive cash flow returns as high as 10%. Yes, I have properties that provide 8 to 10% cash flow returns every month. Okay, which means that if I invest $100,000 in an investment property, I can get up to $8,000 per year. What that means is that with real estate, it's much easier and much faster to create a passive income that would one day replace your active or earned income, which is your 9 to 5 salary job. Okay, so if you have a portfolio, $100,000 portfolio that is giving you 8% per year, you do the math. Okay, that's about $8,000. All you need to do is build up that portfolio and acquire 6 to 8 more properties, or maybe 10 more properties, and you could have enough passive income coming in as cash flow every month that you could live off on. Okay, and achieve financial freedom, which means not having to depend on your active job anymore. Okay, so income is one factor to consider. If your aim is to achieve financial freedom sooner, which means not being reliant or dependent on your 9 to 5 job, but having the income to do whatever you want to do, it's faster and easier to achieve that through real estate investing. The sixth factor you have to consider when making an investment choice is returns. How much returns is sufficient for your long-term goals? You see, the S&P 500, which is a popular index that is composed of the largest 500 US companies, has provided an average annual return of about 10% since its inception. 10% is a great rate, it's a phenomenal rate, especially when you consider how little the bank pays you for keeping your money in a savings account. Bank nowadays pay you, anywhere from like 0.01 to 0.03% on your money. So 10% is a great rate from the stock market. Now the question you have to ask yourself is 10% sufficient for me? Okay, and the only way you can know this is to determine what your long-term goals are. Okay, for example, if your long-term goal is to become a millionaire in the next 10 years, okay, the rule of 72 tells you that, okay, if you have, say, $100,000 capital right now, okay, in order to achieve $1 million in 10 years, you have to double your money every 2 to 3 years. Okay, we can Google up the rule of 72 and it explains how I got that assumption. Okay, so looking at it that way, 10% might not be sufficient. Okay, if you want to become a millionaire in 10 years, starting with just $100,000. Okay, and that's where real estate comes into play. With real estate, you can achieve much higher returns than the stock market. An average investment property, when purchased correctly, can give you over 25% internal rate of return on your money. If you check in the link down below, one of the links down below, I've provided a video where I analyzed an actual property and showed you how you can achieve a total return of 67 to 81% on your original investment. And the reason why real estate investing allows you to achieve higher returns in the stock market is because there are four main ways you can make money through real estate investing. And again, I have another link where I talked about this, but the four ways are cash flow returns, principal pay down returns, appreciation returns, and tax saving returns. Okay, so those four ways, when you combine all the returns together, you have a massive return that is much higher than the stock market. Okay, but this is only for people who have the desire to achieve, or who have that strategy or goal to achieve very high returns, because they are trying to get to a target on a particular date. Okay, so if you don't have such a short timeline, okay, if you're comfortable with just 10% based on your long-term goals, stock investing is probably the better approach, because like I mentioned earlier on, real estate investing does come with a lot of work, and if you really want to have those higher returns, you have to be willing to put up with the risk and the stress that comes with real estate investing. The seventh and final factor to consider when making an investment choice is tax savings opportunities. Now, this is one area where real estate investing wins by a whole lot. You see, as a real estate investor, the IRS allows you to deduct several items from your tax returns that would allow you to defer taxes and reduce your tax liabilities. Okay, you can deduct things like insurance, property taxes, all of your operational expenses, management fees, depreciation on the property. The list goes on and on. And at the end of the day, you might have to pay $0 in taxes legally. Okay, now there are ways you can save in taxes in the stock market. A popular way is with a retirement account such as a 401k. So the IRS allows you to deduct all pre-tax contributions you make to your retirement account. So you don't pay taxes the year you make those contributions, but then you would have to pay taxes when you eventually withdraw that money out. Okay, but the tax savings you would get from a traditional 401k is nowhere close to the tax savings you would get from real estate. Okay, with real estate, like I mentioned, if you work with a good CPA, you can pay $0 in taxes legally. Now, one thing I have to stress out here is that you're not avoiding taxes, you're simply deferring taxes to a later date. Okay, so some of those tax savings that you're getting right now, you would have to pay them later on. But in the short term, you can actually save some of those taxes that you would have paid and reinvest all that money back into the market so you can build wealth faster. And this can be very significant, especially if you consider that taxes could be one of your largest expense. Okay, so if you make $100,000, you'll probably be in the 24% tax bracket, so you have to pay federal taxes of $24,000 plus an additional state tax, and that could also be high depending on what state you live in. So the ability to take your largest expense, save it, not pay taxes on it, and then reinvest it back to build wealth can be very beneficial. So that's another factor to consider, tax savings opportunities. So there it is, guys. I hope you guys really enjoyed this video and learned a lot. Investing or making a decision on what investment vehicle to go with is really based on your own personal preference. Okay, so if you really love your 9-to-5 job and you're looking for a stress-free investment vehicle, stock market is the way to go. If you're trying to achieve financial freedom sooner and are looking for higher returns, real estate investing is the way to go. Whichever decision you decide to make, the most important thing you have to know is that you have to start investing right now. The bank, like I said, won't pay you enough return on your money for you to build wealth. Your money has to be invested, whether it's in the stock market or the real estate. And a good way to go about it is to diversify. So just do a little bit of both, and that's what I do. I have some of my money in the stock market and some of my money in real estate investing. That way you get a feel of both investment vehicles, and maybe one to decide which one you want to go with. Guys, thanks for watching my video. Please remember to hit the like button and also subscribe by hitting the subscribe button below. That way you don't miss out on any of the other amazing content I have for you. My aim is to post a new video every week, and I really don't want you to miss out on any one of them. Till next time, stay invested.